Hello and welcome to today's Dalal Street Week Ahead video. Now in today's Dalal Street Week Ahead video, we'll be taking a look at three stocks, which is Paytm, Hindustan Aeronautics and State Bank of India. I'm taking a look at HAL as it has got its results coming out on Tuesday. SBI gave its results on Friday, and Paytm is at an interesting spot. Plus I have shared before information about my trades in it, so it's better to cover it now and give an update. Now before that, let's take a quick look at the market in general. Now, according to me, this coming week, I expect the volatility to continue kicking in due to the Trump tariff wars continuing, and I think that's going to overshadow most of the results and whatnot. For example, I've seen a rumor coming that India might put retaliatory tariffs on US because of US they're putting tariffs on the steel plus aluminium sector, and that seems to have touched a nerve. It'll be interesting to see if that actually happens, because the Prime Minister is not known to be one who's confrontational with Trump, and if that happens, I expect the tariff war to really heat up as Trump will go nuts, and he'll say now it's 100%, it's 150%, so that will really give us volatility in the market. So option buyers and option sellers, I think this week will be another good one. Option sellers last week was tough because of handling the volatility, but option buyers was one of the best weeks you could have asked for. Now, coming to the three stocks, I said I'll start with Paytm, then I'll cover State Bank of India, then I'll cover HAL, Hindustan Aeronautics. Now coming to Paytm, those who do receive my messages via WhatsApp or do look at my tweets know that at the end of every live trading session, when I do share my view on how the trading session went, when Paytm made this high, I had said that me and the viewers of the live had put C cells in it in the 31st July and August series. Now those C cells, naturally the 31st July once we booked profits and closed them as on the expiry of July. But the August C cells are still being held of 120 and above, and they're doing fantastically well due to us going below it. Plus we got a very early entry, so it's given about 60% of the premium has been eaten in those C cells. Now, I've chosen to cover Paytm here at this point because it's reached 1045. This is, if we look at Paytm, it's trading in two box ranges. One is between 1045 and 1120, and one is between 1120 and 1010. So, if in the coming sessions it manages to break this box range, then it will be a shot to the bigger box range. If by chance it breaks the bigger box range, then it will completely go from a bullish trend to a bearish trend, as it will fall to 940 to 955. In fact, I wouldn't call it even a bullish trend. I'll call it a neutral trend, as so we have literally stopped at this point. So what's my trading plan? The CE cells, I'm going to continue holding them as of now, since, as I said, we have eaten a good amount of the premium and they're doing well. On the other hand, if it breaks 1045, then I'm going to do an intraday short towards 1010, and if I will at 1010, I want to see if that holds, because if it manages to hold that zone, then you'll get a chance to also sell puts in it. If it manages to break this zone, then you can enter fresh CE cells of above 1045. So I'm looking at 1040 and above, basically. So that's how I'm looking at Paytm. Equity traders, I don't think you have anything right now in Paytm that is worth it. Risk reward is very poor. Yes, okay, if it holds 1010, I can go long in equity, but till where are you going to go long? 1120? Doesn't make sense. So I think if you're an equity trader, avoid Paytm, as it's not your cup of tea as of now. This is more of an option buying and option selling stock presently. Now next we'll take a look at State Bank of India. Now State Bank of India has been a huge underperformer this year. I say this as while other stocks may have given up moves or down moves within a range which is juicy, State Bank of India has done absolutely nothing. I say this as if you look at the chart, we'll see that it first entered the box range on 24th March, then started a new box range from 21st April. After that, from April to August, we're still in the same zone and hovering. Now, when its results came out on Friday, I'm sure many thought that yes, we'll finally get a move, but due to the Trump tariff issues, we could not do so. So now, what's the plan ahead? Now, I think if you're a directional option trader or equity trader, only consider SBI if it breaks 810 or 792. This is it's trading with the box range of this zone. If it breaks out of these two zones, then you can, if it breaks above 810, you Equity traders can consider buy for 828 to 845 as a target, and option buyers can do the same, and option sellers can sell puts. On the other hand, if it breaks below 792, then it's a short to 775, and then if it breaks that, 750. So now I look at SBI in two ways. It's got opportunity for directional traders, and it's got opportunity for non-directional traders. What I mean by that, directional traders are the ones who will want to say, like I'm waiting, if it breaks 792, I'll take a short and I'll sell calls above 800. And I'll hold them, let's say, for a week and then take the profits. Now that's a directional trader. Now non-directional trader is the guy who will just go and sell a range and sit with it. Now non-directional option sellers, I think they can sell C's above 828 and P's below 8775 and let the premium continue until basically they're satisfied with the premium collected, or they've reached August expiry, because this has been trading in a range for very long and can continue to do so for very long too. So that's why I'm looking at the very important support 775 and the very important resistance of 828. I personally will not do that because I am more of an option seller who likes ITM and ATM selling. I don't like non-directional selling because the risk reward is always very rubbish. You're risking 10 to earn 1. Doesn't make sense to me, but that's my style of trading. So that's it for SBI. Next we'll take a look at HAL. Now HAL has had a bad couple of weeks. Basically from 19th May it's been going, it went into a box trend and it started its decline mid-July. Now this has mainly been, I would say, due to the negative press it got about delays and whatnot. Now according to me, HAL is trading between a box range of 4700 and 4280 that's the big box range, and a smaller box range of 4400 and to 4700. Now personally I have sold puts in HAL because I believe this box range will hold, and if it holds then it can end up giving an up move in the coming sessions. So what is my trading plan? As long as HAL holds 4280 to 4700, I'm going to hold my CE cells and wait and see if the decay comes in or not. But if you're an option buyer or equity trader, then if it breaks 4700 or 468 to 4700, then there's a long opportunity, and it can go to 4920. If that breaks, it's got the sky is the limit. On the other hand, if it breaks 4400, then it's a first shot to 4280, and if it breaks 4280, it's a shot to 4130. It will be very important to see that it holds 4280 on any downswing, as a break of 4280 will sort of send the bulls into a coma. So that zone holding is very important for HAL. So that's my view on all the three stocks and what I'm going to do with them. If you liked it, then hit the like button, subscribe to the channel, and also click the notification bell. Thank you.